How many of you remember where you were on September 29, 2008? A few of you? Good. That was the day that the stock market dropped 777 points. And by the 5th of March the following year, of 2009, the market had dropped to 6,594, about 50% of the October 9, 2007 high. What do you think happened? To understand what happened there, we need to look at and understand what an illiquid asset is. There are 5 key attributes of an illiquid asset: lack of price discovery, lack of transparency, counterparty risk, no guarantee of settlement, and high frictional costs. And all these 5 elements were alive and well in a very important and large asset class, the asset-backed securities and the mortgage-backed securities. The hidden fraud and the lack of understanding of value in these assets caused them to crumble, thereby leading to the global financial crisis. So after the asset-backed and mortgage-backed securities destroyed the world, the financial services world as we knew it, the company that I ran, we provided data analytics and technology to the asset-backed and mortgage-backed security space. And we worked with the Bank of England, the Reserve Bank of Australia, to help them accept illiquid collateral from financial institutions and give them real money to lend it back into the real economy. We also work with the Federal Reserve, the Fannie Mae and Freddie Mac, with their common securitization program. And that was when it struck me that it's very difficult to value and trade illiquid assets. So let's go back a few years. So ever since the 18th century, people have wanted an ownership stake in a fairly illiquid asset, the company. But owning a company was impossible and unaffordable for the common man. But in 1790 and shortly thereafter in 1792, what we today now know as the New York Stock Exchange, which followed the Philadelphia Stock Exchange, opened the doors to share ownership. Shares effectively allow partial ownership of a otherwise illiquid asset, the company itself. And shares are a token. The first time I'm going to use the word token. Are a token and a representation of the security interest that it represents in a company. And then did the stock market take off? Over the last several years, the value creation and the wealth creation in the top 60 exchanges globally now stands at $69 trillion. So the fact of tokenizing shares led to such massive value creation. But then something incredible began to happen. Today in the US, we have fewer companies listed on the stock market than there were in 1975. The portion of small companies listed has collapsed. And there was a time when small companies used to lead the market, and they no longer do so. They have stagnated. And while the number of $1 billion IPOs has stayed relatively flat, the number of venture-backed companies with $1 billion or greater valuation is skyrocketing. And the average time from first investment to a liquidity event or an IPO has ballooned to 6.2 years. So what is going on here? In the past decade, money has flowed into private equity and venture capital and has given the small company CEO a very inexpensive option to raise money without going to the public markets. So effectively, private is the new public. And stock exchanges and listing are no longer the only path for a small company CEO to drive value in his company. This still leaves, though, the problem of the early investors and the founders, because absent a distant IPO and absent secondary sales, they can't realize the value out of their shares. Their shares are essentially stranded. But before I address the issue of illiquid private company shares, let us look at a couple more interesting data points. So after 20 years of rapid growth in traditional flows of goods, finance, and services, goods such as electronics, vehicle parts, pharmaceuticals, medical equipment, and even apparel, while the absolute number and the absolute value has been growing, the relative percentage of these goods and services in the global gross domestic product is declining. What's happening is digital platforms are creating more effective and transparent markets. They provide businesses with enormous built-in customer bases. And you will notice here that the cross-border flows from 2005 to 2014 in terms of data are now 45 times larger. So global wealth creation continues to grow, with the US leading the way in the number of millionaires and wealth creation. And most other countries like Brazil, India, China, Japan, and the Eurozone are following briskly along. But this is not a tale about US leadership. Rather, it is about no country being left behind. And as data flows continue to grow, while the physical transport of goods and services may be a smaller percentage, we expect that the digitization and tokenization of these goods and services will further fuel the growth of the global domestic product. And so back to the open issue of the highly illiquid private company shares and the potential for a secondary offering or a lack of a secondary offering. As these shares of private companies get digitized or tokenized or fractionalized, and I use those three words interchangeably, the early investors and founders will find their liquidity with secondary sales to buy the cars and the houses and the food on the table. But thus far, the digitization of these three large components of the economy, financial assets such as currencies, private capital, natively digital assets, real assets such as real estate, exclusive goods such as fine wine, planes, cars, and debt such as asset-backed securities, mortgage-backed securities, loan pools, bonds, etc., has proven to be very, very difficult. And these asset classes suffer from a 20 to 30%, sometimes as high as 50 to 60% of an illiquidity discount. And unless we find an effective way to digitize, tokenize, or fractionalize these highly illiquid asset classes, we won't be able to achieve the levels of value creation that I suggested to you earlier. So along comes blockchain. Ask someone what blockchain is, and they launch into this very complex explanation of what it is. And the first time I heard about it, it just blew my mind. But stop. Blockchain is really no more than a secure database with built-in or integrated mechanisms for accessing and communicating the data. Said another way, blockchain is at the intersection of secure data storage and secure data transmission. Now with that definition, I can tokenize, digitize, and fractionalize these illiquid assets. And here's why putting these assets on a blockchain makes sense. Shares of a company allowed participation in ownership of a highly unaffordable and illiquid asset, the company. We are now going to see the same exact effect take place on other assets that are currently illiquid. The ability to digitize or fractionalize or create portions of these illiquid assets, such as exclusive goods, loans, securitizations, and the other assets that I mentioned to you earlier, and put them into the mainstream of the global economy, is going to drive huge global wealth. Digitization will enable citizens to own portions of other assets that they today don't have access to, generating wealth for themselves. So let's start making this a little bit more tangible. If you look at the large asset classes that I talked about here, and based on some of the research that we've done, the opportunity in the financial services space is roughly about $308 billion. And now, to make it even more tangible and closer to home, I want to talk to you about some real use cases that we at Alphapoint have currently deployed. And these are real live applications here. So the first one is, I talked about commodity. Gold is an excellent example of commodity. Lithium, also another great example. Tokenizing gold by having one token represented by a gram of actual physical gold sitting in the vault of the Royal Mint or some other place is an excellent vehicle to drive liquidity into an otherwise illiquid asset sitting at the store of the asset manager. Currencies. How many of you think currency is highly liquid? The US dollar. Show of hands. How many of you think it's a very highly liquid asset? Okay, a few hands there. It is very liquid in the United States of America, yes. But now let's say you want to go to South Africa. So you go to the bank, convert it to a few rands, and you lose a lot of the fees taken out. You go spend some rands there, and you convert it back to the US dollar. You've lost some more there, and you're back with a whole lot less than the amount of goods that you purchased in South Africa. Subject to capital controls, currencies can be tokenized or digitized, and we have customers currently who have digitized national currencies and are now leveraging that. Private shares. We have customers today who trade private shares. We talked about the highly illiquid nature of private shares, the lack of a secondary for the early investors and the founders. We have customers today who have digitized and tokenized private shares and are now trading them. Real estate, let's talk about that. There may be some of you here who can afford to buy a $500 million piece of property in New York or Boston. I know I can't. But if that $500 million property is digitized into 500 million pieces or tokens, then I know I can afford at least 1 or 2 or 10 or 100. And that's true for all of you. And we have customers today who are digitizing real estate and real-world property. We talked a little bit about bonds, loans, and portfolios. We're working with customers to digitize T-bills and loans and bonds. And this is a picture, this is a Van Gogh, and it's the Starry Night. And this is a real use case where the provenance of a piece of art is very important, the origin and the value and the custody of the art. And by digitizing it on blockchain, we are able to provide liquidity into a huge store of value here. But all this is worthless. Simply digitizing or tokenizing assets is of no use unless and until you're able to provide a platform on which these newly digitized or tokenized assets can be traded. And so Alphapoint today provides the largest framework of global digital asset exchanges. So what we focus on is we help make illiquid assets liquid and we provide the platform to trade these illiquid assets. In this ecosystem of blockchain, we've been around for 5 years. We had our 5th birthday yesterday. Happy birthday, Alphapoint. So we've been around 5 years. We have some of the largest global financial services customers as our customers live. And we have a network of over 70 digital asset exchanges live. We power some of the larger exchanges globally. They're alive today, they're trading, and many of you are using our technology for these exchanges. So I'm running out of time. I'd like to close by saying that we believe that the next wave of business capital formation and societal wealth creation is going to come from digitizing illiquid assets. Much like shares of a company allowed the participative ownership of a company, a highly illiquid asset, we believe that digitizing and tokenizing illiquid assets of the type that I mentioned to you before and the use cases that I shared with you before is going to create massive value in the global economic system. And Alphapoint is positioned with two things. Many of you here are looking at ICOs. Many of you are looking at tokenizing and digitizing assets. We have the technology to do that, have been there, done that. And after you digitize those assets and tokenize those assets, many of you will need to trade those. Come be a part of our 70 global exchanges. We've been there, we've done that. Thank you.